The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Yeah, let's get to it. My name is Donald Green. I am the founder of the First Fruit Stock Club. And man, I'm blessed. I'm here every Wednesday at 10 o'clock to talk about stocks, to discuss the stock market. All right? Absolutely. And the First Fruit Stock Club is a community of investors. We invest in the market. We have a strategy called the First Fruit Strategy. And what we do is we execute in three ways. But before I get into that, let me just so today's topics, man, we're going to get in week 2 of July. July started off rocky, but I believe that July is going to end in a good month. I mean, statistically, July is one of the best months for investing. Man, we're going to talk about earning $10,000 in July. And my goal is $10,000 every month in the market. I'm going to show you how I'll break that down. We're going to go over the top performing sectors of the week. Top performing sectors. We're going to talk about market communication and then that market rotation. That's one of the buzzwords that's been going on. We'll talk about the volatility lately, and we're going to talk about risk off. All right. So we're going to get into all these. So first thing is first. My goal when I do this weekly, my goal is to give you guys some information so you guys can have a profitable month trading. Like my goal was to get you guys to have a profitable month. How do we do that? How do we have a profitable month? All right, and we do it as a club by using what we call the First Fruit Stock Club strategy. And our goal is to hit that $10,000 mark. If we can get to $10,000, I think that's definitely a good month. You know, I personally have had some months beyond that. Okay, in the club, nobody's hit that yet, but we've had some very profitable months, and people are, basically we're the club is building out, and a lot of people are first time investors, but we do have some people who've been investing for a while also. So it's a mixed community. More beginning, but they're building out, helping them build out their portfolios to get to the $10,000 mark, man. And so look, first, before I get in that, please like, subscribe, and share. Please like and subscribe and share. I'm trying to share my message in regards to investing. It's a lot of mess online. And hey, I will admit I watch mess also, but we have to include some fruitful information in our online watchings, okay? If we spend a lot of time online on our phones, we have to watch some things that in the future we can expect fruit, all right, to come from those things. Second thing, let me just do the disclaimer. Man, has to disclaim the information provided in the First Fruit Stock Club podcast is for educational informational purposes only and should not be considered for education, informational, not be considered for financial, investment, tax, legal advice. The views expressed by the host and the guests are of their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. First Fruit Stock Clubs and affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Man, hope you guys are having a good week. All right, so let's get into it. Let's get into it right away. $10,000 in July and $10,000 every month. So let me break this down. Okay, so first we want $3,000 to $4,000 in dividends, right? So dividends is kind of the core of our portfolio, right? Dividends is the basis. And I know a lot of people want to start off with options, and options are sexy. And even long-term portfolio, even having a long-term portfolio. No one ever, I hear a lot of conversations online, but no one ever answers the question, and I know the answer to this question, but how do you really spend money from your portfolio? Like after you accumulate all this money from your portfolio and it compounds, and I mean, how do you spend money from your portfolio and just leave and still kind of leave the portfolio alone and let it compound over time like it should, right? And the answer that to everyone, I say the answer to that is, man, using dividends is the foundational investment strategy or investment tool, dividend stocks of your portfolio, right? So dividends can do a lot of different things. A lot of times, man, you need to pay yourself something, right? I know I hear a lot of people, well, you got to be invested for 100 years and never touch it. I mean, yes, I understand where they're getting at. You need to let things compound over a 7 to 10 year period. But sometimes, life's, and you need a little extra money. Well, what if you had a dividend portfolio as well as with your long term, as well as your options, where you can have those two strategies grow, but the dividend portfolio continues to grow, and you can add on to that portfolio. You can take some of the cash and deposit into your bank account. If you need to use the cash, you can reinvest the cash, right? So having that dividend portfolio can be the basis of your portfolio. So once we have those dividends, that dividend engine, the next step, right? The next step is, and we're going to skip down to 3. We're going to say long-term gains, right? $2,000 in long-term gains. Now the $2,000 in long-term gains we may not touch, right? We're not going to really touch, unless we have to reallocate the portfolio. Maybe the allocation is out of whack, and you need to take some money and move money from one sector to the next. For the most part, it's better just to leave the long-term portfolio alone and don't touch it. And then over time, it will compound and grow. Companies grow over time. Companies that are really good at allocating capital, meaning reinvesting that money back into the business. Companies that are really good, really focused on their business. Companies that have dominant positions in their business. Companies that you want to buy, companies that are going to lead, that are going to be in front of the new revolution in regards to business. Right now, it's AI. That's the buzzword. You want to have some of those companies, but you want to have some of the best companies in the world in your long-term portfolio, growing over time, right? And what I always try to, when I'm speaking, and I'm going to students and I'm talking to students, and I speak and I talk to different groups about investing, right? And when I'm discussing, I say, look, when you are investing, right, the reason why investing works is because when you're investing, everybody that works at the company now works for you, right? So you have thousands of people who are doing different tasks in an organization who are very talented, the top talented people in the world who demand top salaries, right? Now work for you, right? They work for the company, but as a shareholder, they now work for you. You are an owner, right? You are an owner, and what that does is, as an owner, we get to gain the benefits of the talent without actually working for the company, right? We say, look, I'm going to give you guys more money. And with that money, hey, you're going to reinvest those funds for me and we get long-term gains. So look, having a long-term portfolio is the next move, right? And then one of the last moves you need to make is trading options. And I'm what's called a swing trader. What is a swing trader? If you think about it, right, just think about the name swing, and you have a person that's up to bat, playing baseball. We're playing baseball right now. I know I have a football cap, but right now we're playing baseball. And the pitcher throws a pitch that is low, right? It's low, he's trying to get it over the plate, in the strike zone. The strike zone is usually lower, it's not higher, right? And the pitcher's throwing it low. So basically what we want to do is we want to find that pitch and we want to swing and hit that pitch up. We're trying to hit a home run out of the park, right? So when the pitcher is pitching the ball and the ball is a stock, right? And the stock goes down in value, right? We want to swing and at the perfect time buy the stock when the stock counteracts that trend and starts to move back up and swings through the process and becomes more valuable than when we purchased the stock. And we do this with options, with leverage positions with options. We trade options, in the group, right? And this is this has been a market, but there have been great opportunities in this market with AI companies like Micron and if you're investing in semiconductor chips, two areas that we like in the club, and as well as basic companies like cruise lines and airfare. When the market changed, right? We put some trades in early on, but there are some opportunities if you were to get into when they decided to cease fire or things have cooled down. Now you had opportunity to buy companies that were going to benefit with the lower price of oil, or perceive, because a lot of times the companies they hedge it anyway. But the market perceives it as the companies will do better now because the price of oil goes down, which is in gas or whatever that they use for rather cruise ships or whatever transportation, and reduces the cost. So once again, the trading analogy is that when the war started, right? We bought in the beginning. You bought oil because the price of oil was going to go up, and then as it changed, and that, of course, the longer it goes on, and the different pressures that go on with the president deciding, sooner or later he's going to decide to open the strait, right? And when he got those, when he made a decision to open it back up, yes, that produced the opportunity for us to now be able to trade in companies that were going to be closely tied with the price of oil and gas. So therefore, you trade there. So there you find opportunities in the market, and you trade those opportunities, right? And we continue to trade those opportunities and find them in the club and find them in the market, all right? So when we combine all three, like I said, $3,000 to $4,000 in dividends, $5,000 in trading, $2,000 in long-term gains, you create a system that allows you to strategize or to maneuver as the market changes. As volatility comes, right? And we've seen today, volatility in the market, at least the last few days. The market's been very, very volatile for the fact of there's initial rumors before things happen, allegedly, right? And then there's the actual action of our president not being happy with Iran, which we are in war with right now, and deciding to put the deciding to put the war back in full throttle and the ceasefire as we thought has ended. But I believe that we'll probably come. There will be another conclusion. Who knows how long the war will go back on, or how far they'll go. Hopefully, they'll come to a conclusion. There's never, in war, we never want to do that. There's always people and lives are in effect, but those are the things that happen that are out of your and my control. But but that allows us, as investors, it allows us to think about our portfolios and where they should go and where we should position ourselves. All right. So look, when we look at the market and we look, hey, how can we make money in this market? Right. The new communication was market rotation. Right. Market rotation, and the market's been rotating from technology to other sectors. And these are some of the sectors that have been leading lately. Materials, right? Communication services, which is interesting, includes technology companies such as Google and Facebook, and then energy, the XLE, right? And we just talked about cost of energy going up, but traders have been moving back into energy during this time. And we'll see how this works out. But these are what's leading right now. But I was looking into some trades today, and at the end of the day, of course, the market and technology, where I really like to trade, there were some stocks moving up, right? Starting to move up and starting to change. And as you looked at the charts in the market, at the end of the day, there was some buying. So there'll be some opportunities there in the market, opportunities for us to position ourselves in the club, and that's what we're looking at. But man, we always got to prepare in the market. We always got to prepare for risk off, right? We can prepare our markets and prepare our portfolios for when risk is off. And when risk gets turned off, all the trades go to trash, go to the trash. And it doesn't matter what you in, but and this hasn't been a totally risk off market, because some days, if we looked at the returns of the indexes, and the indexes kind of rule everything, and where we put our focus on, we had some days where the Dow Jones Industrial Average is up, but the NASDAQ was down, right? But what's been really rocking it up is the Russell, right, which is the small cap stocks. But there's been a juggling of two. Now, when risk off happens, all of them just go down. It doesn't matter what it is. It doesn't matter what the communication is negative. And that's why I still believe that there is some returns to be made this month. The market has been volatile, is down midday, rockets up, towards the end of the day, then close down, and sometimes they close up. So the market is very volatile. This is really a day trader's market. I guess, as a swing trader, I could day trade. I choose not to. There's a lot of time involved in that. But if I try to do it, it'd be the same process that I use, right? Finding trades, finding opportunities in the environment, looking at the personality of the market and matching stocks that match that personality, right? And in the club, we also use the Greeks, especially delta, right? The delta gives us the probability of our stocks, of our portfolios, or our options in the money. And stocks have different deltas according to the price points that you pay. So there's a lot that goes on with that. And what I do in the club is kind of get rid of all the information and give you just buy this here and I'm looking at exiting at this point, and we hope we're successful. And sometimes things don't turn out, but I've been successful more, a lot more than I have not. All right. So that is it. That's the show for today. Just wanted to come in and talk to you guys about the stock market. I know it's a lot going on, and we always come to this point where we have the volatility in the market, but the volatility is where the money is made, right? If the stock market just stayed flatline, there would be no money made in the market. I guess, if the prices just stayed the same all the time, no money. The volatility is where the money is made, because when the market goes up, when the market goes down, gives you time to buy again. But it's scary. So will it keep going down? Will it stop going down? As traders, you have to do this for a while. And if you don't, if you're beginning your journey in trading, you need to get with a group that's going to say, hey, look, we've been through this before. What we need to do is put the money in the trade. When a dip occurs in the stock or whatever we're trading, whether stock or index, and guess what? We have dividend money coming in. It's a time to fill those dips up and buy more shares, buy more options, and then when the stock returns to its average or its median price, then therefore we have a successful trade, and therefore it makes us successful. And look, if you guys are looking for a place, all right, and you think that you want to become a trader, you don't know where to start, you don't know how to start, you're nervous about the markets, you don't have a strategy, man, think about joining the First Fruit Stock Club. We are a club of swing traders. Man, we help you get to that $10,000 mark. Nothing's guaranteed. The stock market is very volatile, but it can be done. I am proof, and that's the reason why I started. I figured that I could give information out to the masses and see how to get people involved in the stock market. It's like only, I think, 40% of people in the United States have a brokerage account. It's a really small amount. A lot of people don't know stocks. A lot of people are scared of stocks. But in this economy, in the way our economy is designed, you have to be an investor to beat the cost of gas, cost of inflation, cost of food, right? You just can't just spend. And the markets, this system is not designed for people who just want to spend. You got to put money back into the system so the system can generate more jobs. That's your job. And like when you say, well, I worked and I don't need to do anything of that, that's when the market brings its bully shoes out and it creates a bully, right? Comes out and says, take that inflation, take that them higher costs, right? And therefore, and then basically destroys your standard of living. It makes you think that you're okay the way you are, which you're not if you don't decide to invest outside of your retirement plan. It's real important, investing outside of the retirement plan, creating that portfolio, starting out with that dividend portfolio, having an extra $100, $200, $300, $500 a month, taking a percentage of that, putting it into a long-term portfolio. And then once you get more comfortable, we can then move on to some of the option plays, right? And there are percentages of each of those portfolios that I give the club. So that's the opportunity that lies. There's a lot of people out there discussing stocks, I know, but it's a topic that the information needs to be spread, and a lot of people are looking for side things to do. The stock market is one of the best, considered ways to make passive side income. Okay, you don't have to deal with any more people, right? It's just you and a brokerage account, and you deciding to have a budget. The first thing that I really talk about and I really discuss is having a first fruits budget, right? Budget. And what the budget is that putting the in front when you first get paid, right? And there's scripture on this, okay? You look up first fruits in the Bible. It said when you earn money, okay, you're supposed to give a percentage of it away, and for two, to invest it. Right? All right. Read about what it says about the man who went on a long journey, and when he came back, he took from the one who hid the one talent and did not invest, did not put it in, and it says with the bankers. Right? It discusses that. And takes the one with the two. That sounds like inflation to me. Says, hey, you don't want to invest with the bankers, you don't put your money there. Guess what? We're going to take the little money that you had that you thought you were going to have a lifestyle with. We're going to take it and give it to the market, give it to the people. And it gives it to the people by the businesses will always raise their prices. And the money that you think you're going to save, the businesses are going to raise their prices and take that money. And you're not going to be able to do anything about it because it'll be something that you need, food, gas. It's the way it is. It's never going to stop. So that's why I'm here discussing for you to become an investor, become a swing trader. There's plenty of opportunities out there for you to find out. We're in the AI revolution right now. Companies are making more money ever in history. You're in the greatest market in the world, $32+ trillion in GDP. Right? A lot of majority of the, I said, think what 8 of the top 10 companies are based here in the United States. You have a great opportunity, right? And you should be swing trading, right? You should be long-term investing, and you should be using dividends to replace a portion of your salary, if not all. Man, I'm Donald Green, the founder of the First Fruit Stock Club. Until next time, everyone, be fruitful. Episode 23, Swing Trading. See you next week, God willing. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.